Welcome back to another episode of the WHIP Report. This is R. Gregorian, and in this lesson, I'll be going over the three types of financial reports your surety may be asking for. Starting with the compilation. Compilation is the lowest level of a test engagement without getting into the technical definitions. I'll just keep it at a very high level. You can go and research on your own what exactly a compilation means in technical terms, but overall it's just taking your trial balance and putting it into financial statement form. It can be with or without footnote disclosures, and generally you won't hear anything from your CPA unless something just looks way off. If once they're done compiling the financial statements, balances just look way out of whack, line items don't seem to match up, then you'll be hearing from your CPA. Otherwise, there's no real deep dive into anything. The next is the financial statement review, which requires inquiry and analytics, taking your balances, asking you questions if you reconciled your bank accounts, if your accounts receivable is collectible, if how your jobs are going, if you anticipate any hiccups along the way, if cost to complete should be adjusted, so on and so forth. A lot of questions, just based off line item, based off specific jobs, and in the process doing some analytics like calculating your work in, not work in progress, but working capital, doing some AR aging analysis, things like that, that they'll probably develop more questions for along the way. So that's a review. A little more time consuming, more interaction with your CPA. And the final one is the financial statement audit. That incorporates inquiry and analysis. Big difference here is the request for support to substantiate major balances. You're going to be having your CPA out there on the field, typically asking or requesting for documents, not just asking if you reconciled cash, but getting your bank statements, subsequent bank statements, getting your bank reconciliations to actually look at those reports and see if that's what you're doing. Confirmations as well, cash or bank confirmations, accounts receivable, sending out confirmations to your customers to see if they agree with the amount you say they owe you. So a lot more procedures, test work, requests for documents, things like that. It's more invasive. I always suggest talking to your surety, making sure you need an audit or a review. Get by with whatever you can. I mean, the least amount of work, the better for you. If you can get by with a compilation, go with a compilation. If you can get by with a review, do it. It's up to you and the users. It's not your CPA's decision to call whether you need an audit, review, or comp. It's just based off of where you're at and what type of credit the sureties can extend to you. So thanks for tuning in, and I'll see you in the next lesson.